friends, welcome to our YouTube channel Trading with SP. Friends, in today's video, we are going to see the summary of the book Day Trading Secrets Part 1. So let's start with the video, friends. So author mainly focus on the two things. The first one is winning more trades than you lose. For an example, if you are taking a 10 trades in a day, at least 8 of the trades should be the win trades, the trades which will give you profit, and 2 trades may be of the loss. It's fine, but the winning bigger than you lost. The winning trades should be bigger than your loss making trades. For an example, if you are having a loss, the loss should be limited to 0.3% to 0.4%, not greater than that. And if you are having the profit should be 3 to 4% or unlimited. To do a successful trading, the author mainly focus on the three things. The first one is which stock to trade, the second one is entry point, and the third one is the exit point. Now let's see further in depth. Number first is which stock to trade. The author says do not trade in future and option stocks. Rather, you trade in the equity stocks, because while you are trading in the equity stocks, you get the more varieties of stocks to see as compared to the future and option. Future and options have the less stocks listed, and equity has the more stocks listed. For an example, if I gave you two stocks and asked you to choose one, the chances are 50-50 that you may win or you may lose. Similarly, if I give you four options, the chances is only 25%. Similarly, as the number of options increases to you, means it is a possibility that you may choose the correct stock, or the possibility to make loss is less. Saying further, the author says that choose the easy stocks. Easy stocks are those which stocks may show one side momentum. These stocks can be screened by fundamental analysis, and then these stocks are to be shortlisted a day before you trade. Means if you are going to trade tomorrow, you should be fixed with the trades or the stocks today itself, that I will trade in these stocks tomorrow. But yeah, the stocks and its value should also be fixed a day before. Means I will take this stock at this rate, I will take XYZ stocks at XYZ rate. Means these two concepts should be in your mind, that I will take the stocks at this rate. The next point is the entry point. So the author says that just keep your eye on the shortlisted stocks. Means not, you have to not look at all the stocks those which are listed on NSE or BSE. You just have to watch those stocks which was, means yesterday you shortlisted some stocks and today you will trade in only those stocks. You will look only at those stocks which was shortlisted yesterday. The author says do not use indicators, as the indicators are telling the past history. The indicators tell what has happened, not what will happen. Okay. So the author says that make a checklist, like a pilot of an aeroplane. The Even though the plane is so modern, the pilot carries the hard copy of the page with the checklist, and they tick each and every point after they are checking. Similarly, you prepare your own checklist. It will have criteria for selection of your stocks, and it will give a proper entry point to you. For an example, the stock should have high volume or MACD crossover or any other. It can be your own checklist. And then author says if the stock follows your checklist, then only buy it. If the stock does not follow in the checklist, or it does not tick all the columns in the checklist, do not buy that stocks. And the last one is the exit point. Means don't keep your loss for the long time. Many of the times, many of the people says, okay, I will keep the loss, I will keep the loss, and what happens is they get more and more loss. So the author says take the fixed amount of loss. Before you are trading, just set in mind that I have got this loss. The loss, the author says to keep the loss of 0.3 to 0.5, 0.4% fixed loss. You will not take more loss than this. 0.3 to 0.4 is your fixed loss and predefined loss, that my loss will be maximum of 30 rupees, 40 rupees, anything it may be. It bears, depends upon you how much capacity do you bear to take the risks. Okay, so what happened once you have confirmed that this is your loss and you have accepted the loss before you trade, your psychology for the trade will change, as it's the point of view of the author. So this that's all for today's video. I hope you may have liked the video. If you have any doubt or suggestion, please suggest me in the comment section. Thank you for watching the video.